My focus at this point was to reduce all the noise that is out there. So just to burst your bubble, I actually don't think there is such a thing as an aha moment in trading, and many traders need to hear this. Hello guys, so I was just seated around. Today is one of those days where I'm not in the market. I don't have any setup. Maybe tomorrow I'll be in the market, but I was having a train of thought around a question that I've got asked a couple of times, in regards to my aha trading moment, which usually is just to mean, is there a specific time or, point in trading where I actually figured out that things are finally working? Can I trace back to a specific moment or a specific point where I was able to tell that, things have changed and my trading is finally profitable, something like that. So just to burst your bubble, I actually don't think there is such a thing as an aha moment in trading, because if you look at it, usually what happens is you can't pinpoint a specific day or time or, time window where you just became profitable all of a sudden. However, I can look back and track to a specific phase, which is a very, long time window of about a 4 to 6 month period, where I think that's where most of the change happened. So it wasn't necessarily one specific day or one specific moment, but I think for me it was about a 4 to 6 month period that was basically my turning point in trading. And in today's video, I just want us to talk about some of the things that I finally started to do right, which eventually led to my turning point. And there are only 3 things that I started to do right. And from my own judgment, before I started doing these 3 things, I think my trading was way messed up. A lot of errors, a lot of, losing months. I was at a point where I was more of a break-even trader until I started implementing these things. Then I slowly shifted from break-even trader to now consistently profitable. And since then to now, I've been profiting in the market consistently, quarter after quarter. I think I've never had a negative quarter so far. The worst I've had is maybe 1 or 2 losing months in a year, which is quite normal. You can't avoid having a losing month or a losing week. But I've been profitable quarterly, meaning my long-term P&L curve has always been positive. I've shown you, I think, recently one of my 1-year account statements, so there's more than enough proof for that. So here's the first thing I started to do right before I eventually got to my turning point, and that is basically precision. I started to be more precise in my trading approach, meaning my focus at this point was to reduce all the noise that is out there in terms of trying to learn another concept every other month. So precision helped me with focus, such that I was able to narrow down and decide for this next, period of time, I'm only be going to focus on one approach. Then with that one approach, it allowed me more time to study that approach in depth. I was able to collect a lot of data, and my goal at this point in time was just to refine the specific model. So instead of trying to have 3 or 4 models or studying new concepts every other time, my focus shifted to only one model, and I dedicated all my time to study this model alone, with the aim to just keep improving and refining it. So as I was backtesting, I was trying to look at different factors. What could I have done to make some setups better? What can I do to make sure I reduce the number of stop losses I hit using that specific model? And what this eventually resulted to was me identifying repeatable setups in the market, which is one key to actually being profitable and saving yourself some confusion. You see, different traders you find every day you go to the market, you're looking for 2 or 3 different types of setups. And at some point, I think it's not bad if you've really mastered what you're doing and you've been profitable for a while. But in your early days, or at least if you've not been profitable yet consistently for maybe even 1, 2, 3 years, it's very important to just focus on that repeatable setup that you can see in the market over and over. So this helps you to train your eyes such that when I go to the market, I'm only looking for A, B, C, D. It eliminates confusion in your process of doing analysis, and it also saves you a lot of time. Instead of being in the market from Monday to Friday trading every day, you're able to narrow down and tell, unless I've seen ABC, I can't be in the market. So there are days where I open my PC and there's basically nothing to do. Good example is today. Actually, today is on a Monday and there's absolutely nothing to do on my markets. So it allows me time to do other things, and it also saves me the psychological stress of being in the market on a daily basis, trying to look for a trade. You find yourself sometimes overthinking and questioning, should I take this trade? Is it a good or a bad setup? So focusing on one model helps you to reduce the noise, reduce the confusion, and your setups become very straightforward. It's either you've seen it or you've not. If you've seen it, then you need to execute. If you've not seen your setup, then there's nothing to do in the market. I wouldn't say the same if you have, 4 or 5 different types of setups you're looking for, because sometimes this confuses you. You find yourself you're looking for this type of setup. After it fails, you start questioning, or maybe I should have done this or this. So you find yourself having a lot of confusion, because anything to you can be a setup. I really don't think that is the safest way to approach the market in terms terms of analysis if you are still struggling with profitability. Now, before we continue, let me introduce you to Prop Farm Match, the one place where you can do due diligence for any prop farm you're looking for. Whether it's a CFD farm or a futures farm, just by a switch of a button, you can go all the way from the CFD to futures. And the comparison you can do here is in terms of filtering what farm are you looking for, the platforms that they offer, the countries that they are available, the max allocation, the program types that they do have, and most importantly, if these companies have any discount or any offers which are running, you can always find them listed on Prop Farm Match. If you're a futures trader, for example, here are some of the top futures farms we have on Prop Farm Match right now. You can see the number of favorites depending with the traders that have been using them. And if you are to click on any farm like this, you can find further details about the years in operation. When was the farm created? Who's the CEO of the farm? If they have any discount, like currently we have 50% off on this futures farm. You can take the code here and use it as a coupon for you to get that discount. You can also see all the platforms that the farm allows you to trade with. What is the payout policy? You can simply see what you need for you to be eligible to get a payout with this farm. What are the farm rules? Do we have any consistency rules depending on the model you want to go for? So be sure to check out propfarmmatch.com. I do have their links in the video description. That said, let's get back into the video. The second aspect that helped me to, find my turning point in trading was journaling. And I think this is probably the one that is very huge among all the 3 points I'll share. Because when I started journaling, for me, which is just another form of data collection, the aim was to track the performance and see, out of the trades I've been taking, what have I been doing right, what have I been doing wrong. And it also helped me to really understand myself better, because not only was I focusing on what I've done right or wrong, I was also trying to ask myself, why did I do those things wrong? So I'll give you an example. Maybe you journal and you start to notice that you took a trade on a wrong day. The question you need to ask yourself is, why did I take the trade on the wrong day? Is it because my account was in drawdown and I was trying to force myself to come out of drawdown? Whatever reason it is, you want to make sure you note that down. Maybe you took a trade on the wrong day because you just confused. Maybe you didn't check your economic calendar. Make sure you indicate the specific reason as to why you took that trade on a wrong day. It will assist you such that you're able to understand your behavior, and slowly by slowly, you can put yourself in check both emotionally and in terms of the discipline in the market. So where many traders go wrong with journaling is that they just record trade, but they don't understand how to record the trades and how to analyze that data. So you find that trader has just recorded, I did this mistake, which is nice to know that you did the mistake. But unless you start questioning yourself as to why was I doing those errors, then it becomes difficult for you to find the solution to those errors. So journaling really opened my eyes a lot. It started to show me the real picture that I was the problem in the market and it wasn't a problem of the system. I'm the one who was making a lot of errors in my execution, a lot of errors in my trade management, and just by changing one or two things in the data I had collected in my journal, there was more than enough proof that my performance could have been more positive. So what I did, I remember, for about a 4 to 6 month period when I started journaling consistently, because prior to this I was not a huge fan of journaling. I used to overlook it a lot, even though I had seen many profitable traders talking about the importance of such things. I think I just didn't really understand it in depth, and it took me a lot of losses and repeating errors to figure out maybe it's time that I accept I'm wrong and I need to change how I do some things. But long story short, 4 to 6 months of journaling helped me to identify 2 important loopholes in my trading, which were errors that I was repeating over and over. The first error for me was premature closing of my setups. So most of my trades would hardly hit TP. If it's going to my side, whether I'm targeting a 3R, a 4R, whatever it was, anytime my trade was running in profit over 1R, or even sometimes it wasn't about the R at that time, I was just focusing on the dollar amount. So I was trading small accounts. So assuming I opened my MT5 and I realized I'm floating $100, $200 profit, I was just excited and I was like, let me close that trade, because now my mind is thinking, if I withdraw these $200-$300, it can help me to do 1 or 2 things. So I wasn't focused to trade professionally, and at the time I was doing this premature closing of trades, I didn't even realize that it was a problem, which is something many traders do until death. So typical traders imagine, if I close my trade at $300-$400, at the end of the day I still made money. But again, that's a very short-term mindset, unless you're planning never to trade again. Because if you close that trade at $400 and that $400 to you was a 1R, yet the potential for the setup was a 4R, your TP should have been $1,600. So you've left out a whole $1,200 on the table just to secure $400. And you won't see the effect immediately in the market, but long term, on the day that you'll be having that 3, 4, 5 trade losing streak is when you will realize, if I was having those 4R TPs, 4R or the 5R TPs, even after taking 3 or 4 losses, I would still have a positive positive P&L curve. So your long-term P&L curve is really dependent on having a nice risk to reward in the market, which means premature closing of setups doesn't work so well if you're trying to achieve consistency in the markets. So I never understood how much of a problem this was in my trading data until 4 to 6 months of consistent channeling. Then I was able to notice that if only I was letting my trades run to their full potential, my P&L curve would have been way positive. The second mistake I realized from my journal within the period that I was collecting the data is that I had missed a couple of TPs. I had missed about 4 to 5 plus take profits within a 4 to 6 month period. And keep in mind, within a 4 or even 6 month period, if you miss 5 or 6 take profits and you do a 3R or a 4R, you've potentially missed out 18 to 24 R's, which is equivalent to 18 to 24%, assuming you risk 1% per setup. If you have a personal account and you are risking 3-4% a setup, you can do the math. You've left out close to 60 to 80 or 100% out of the trades you were missing in the market. So after journaling, I was able to spot that there was a consistent pattern where I was missing some good trades in the market. So eventually when I look at my performance, it was quite negative or maybe at a break even, because the trades which would have made me more money, I actually didn't take them on time. And again, through my journal, I was trying to understand, okay, I missed out on 6 trades, but then why did I miss out on the trade? Is it because I was busy on that day? Is it a mistake I did intentionally? Is it that I was fearful? I want to understand my thought process, my mental state or my emotional state at the time I was missing the setup, so that I can figure out what is the problem within myself that I need to work on to make sure I'm not missing these trades alone. Sometimes it could be a psychological problem, like I've said. Sometimes it could be a technical problem whereby you're not so conversant with your setups because you've not practiced them enough. So you miss a trade simply because by the time you are doing analysis, according to you, you didn't spot the patterns in the market. Then after it's already gone to your direction, you come and figure out, oh, there was a level of support, there's a level of resistance, there was an order block, or whatever you use for entry, you see it later after the setup happened. In this case, it's just a problem of, the analysis you did before you took the trade, and a problem of you not practicing enough to make yourself very familiar with the type of setups you see in the market. So you see, when you understand the root cause, it helps you to go and solve the problem. Another person could be missing trades because they are fearful, maybe they have been risking too much and now they've had, let's say, a 3 or 4 trade losing streak. So when they find the next setup, they figure out, you know what, I've lost 4 trades. There is no way I'm taking the next trade. Let me now just relax because I've taken some losses. And it's something I see some traders doing, which I think I have a very contrary opinion on. Like, you've lost 3 or 4 trades in a row, then you tell yourself, let me take a break from the markets. I think if you're doing that, there's a high chance you don't have an edge, you don't have a proven system, or if you do, then you don't believe in that system. Because if I've taken 4 losses in the market and I collected data, already my data should be able to show me having a 3 or 4 trade losing streak is nothing unusual, and eventually we shall recover. But guess what? For you to recover, you still need to keep executing, because you never know, the next setup might be a winner. So the time that you take a break because you're saying I've lost 3 or 4 trades in the market, you take a break and guess what? The next 3 or 4 setups become a TP. So these are some of the things I was able to figure out by understanding what are the errors I was doing for me to miss the setup. Because depending with the error you are doing, the solution is different. So after this period of journaling, it was very clear to me what I needed to fix in terms of the loopholes in my system and the loopholes in my executional or, human behavior in terms of discipline and psychology in the markets. And slowly by slowly, I started to see that improvement, because now I was not closing my trades prematurely. I was doing my best not to miss trades and just basically fix all the problems that I was doing before in my trading. Now here's the third and final thing that I did, which helped me to completely turn my trading around, which is simply making peace with the fact that I have no control in the markets. And many traders need to hear this. The best thing you can do as a trader sometimes is just to execute your setup per the plan, per the playbook, per the system that you've already proven works, and allow the probabilities to play out. You have no control of the outcome of the setup. You should know this not when the trade is running, but you should know this before taking the trade. Many traders take a trade with a big lot size, or let's say they take some heavy risk on that setup without really thinking before they take the trade. But once the trade is running, then they see it, heading towards their stop loss. Maybe it's just halfway to their stop loss. They now realize that if this trade hits my stop loss, I lose a lot of money which I was not prepared for. The reason why you are figuring that later is because you didn't think through before you took the trade. As a professional trader, even before executing the trade, you should have an idea that I have no control in the market. The fact that I have no control in the market means this setup can as well fail. Yes, I have an edge, but it doesn't guarantee that every trade will win. So I'm taking the trade having an idea that this is a potential loser. That way, I just can't risk what I'm not willing to lose. So by the time I click the buy or sell button, I've only risked what I'm comfortable with. And this way, I don't have the pressure to feel like I have to close my trade just because it it's running in losses, because I already predetermined I'm comfortable losing this amount on that specific setup. So it's not the other way around. You don't take the trade for you to now figure out you've risked a lot on it. The thing about letting the probabilities play out in the market, or rather accepting the fact that you have no control as a trader, is that it allows you to grow to a certain level of maturity where you really trust your data and you trust your system. Before you go to the market, you've already taken time to backtest your strategy for 4 or 5 years. Maybe you've already been forward testing it for a while and you've seen without a doubt this strategy has a long-term edge in the market. But for the edge to play out, it needs no interference from you as the trader. You don't need to be going to the markets every day trying to close your trade before it hits the stop loss or TP, especially if it's against the data you've collected. For your system to play out, usually it assumes perfect execution. If you backtested your system and it showed you should be trading during New York Open, that's the only thing you should be doing. If your system shows you are more profitable when you target a 3R, that's the only thing you should be doing in the market. Aim to target for that 3R. Accept that you have no control in the market, and it's completely fine if I take a loss. As long as I was following my plan, as long as I was following my system, then at the end of the day, I'm still a winner, because the system is the one which has a long-term edge. And the edge is just dependent on perfect execution, nothing else. So I think making peace with this reality assisted me as a trader to avoid feeling the need to close my trades too early, to avoid feeling the need to exit a setup just because it's heading to my loss. I mean, how many times have I shown you guys a trade breakdown where the trade went close to my stop loss with maybe 1 or 2 pips, but then eventually it still reversed to my direction? And usually I show you that I still hit TP on those trades because I was okay either way. If the trade was going to lose, it means I had made peace with the fact that I have no control. I'm not trying to control where the market will go next. If it goes to my stop loss, then I'm okay. I had already predetermined my risk and I still trust my system. But there are so many instances where that trade has come very close to my stop loss or my break even with even 1 pip literally, and then it reverses and goes to my direction. 99% of the time, the average trader would close such a setup prematurely because according to them, it's only 2 pips away from stop loss. So there's no need to lose this trade. But if you look at it, realistically, what are you even saving if you close your trade 2 pips from stop loss? You're trying to save $1 or $2, maybe 10, 20, 50, depending with the risk you're using for the setup. So I'd rather just let the trade run, hit the stop loss, or if it decides to reverse like many other trades I've done, I'll still be proud with the fact that I was able to hold it to its full TP without interfering with the setup. So basically that is the third thing which I did to help me get to that point where my trading completely shifted. And trust you me, the day I started to allow the probabilities to play out in the market, it helped me to make sure my risk management is always in place, because now I'm very conscious and aware of the fact that I can actually lose this trade before I take it. And the second thing, it helped me a lot. If the market wants to go up and down, I got comfortable with just allowing the setup to run and the market doing whatever it wants to do. In this way, automatically you've also saved yourself being emotional and trying to interfere with your already running position. So basically that's it. I hope you guys have learned something. As I said, those are the 3 things that I personally used, and there is no specific aha moment that I had in my trading journey. I don't know if there's any trader who had that where they just woke up and figured out they are profitable, but I can say it's more of a turning point where you start to slowly do the right things. And then after a specific period of consistently repeating the things you've been implementing, whether 3, 4 months, 5, 6 months, whatever period it is, you'll slowly start to realize it's at that specific phase that your trading really started to shift in terms of positive performance, in terms of your behavior in the market, how you handle yourself, how you control yourself. And this will be the building block for you to, making money consistently, building capital if it's in prop firms or your personal account, and just having that stability in the market as a trader. So I hope this video was helpful to you. I'll see you next time, guys.